Hello everybody, in this video you will see a course of liquidation zone of webpage toolsforscalping.com. We will talk about how to estimate where the price go to liquidate, long, short, buy, sell. What is a liquidation? What are the liquidation zones? How is the method of calculation of liquidation zone and an estimation method to know which side is likely to liquidate. This is the course program. 4 classes. We are here. We will do a brief review of class 1, open interest. The open interest is the total of open orders. If we have 2 closed orders, one long and one short, we have minus 200 open interest, and if we have 2 orders plus 100 and minus 100 of short, we will have plus 200 open interest. That is because the open interest is the absolute value of the total of open orders. You can see the open interest in the contract details. So what is the liquidation? So for at this leverage level and using this quantity at this price, you have this liquidation price. For a long order, the liquidation price is below the price, the entry price, and for a short order, the liquidation price is above entry price. So what are the liquidation zones? The liquidation zones you can see as the heat map shown in this chart. So what are the liquidation zones? They are areas where the price can go to take stop loss, liquidate people. Area compounding for a lot of this liquidation price of trades that the people make at a market order. The liquidation zones are above or below the minimum or the maximum of candlestick. Also, at no liquidation level, since many do not use stop loss, therefore your position will have a margin call at the liquidation price. They are the knowed liquidation level that the people use to not use the stop loss. So what is a margin call? Margin call is the term that describes the alert sent to an investor to notify them that the equity in their account is below the minimum necessary to maintain an open position. A margin call means that the investor must add additional funds to their account or close the position to reduce their requirements maintenance margin. As clarification, to close an open position is necessary to make the purchase in the opposite direction. That is the main reason of the liquidation zone is in opposite direction. If the price goes at this liquidation price, we will get liquidated or a margin call. So BitMEX, when this happens, do not use a limited orders. BitMEX use market orders. The documentation of BitMEX says that they are trying to use a limited orders, but tends to use market orders. So if we have a chain of orders, one above one to side to another, that that thinks that the price when took one can be liquidate a lot directly. The liquidation zones of the people that sell are above the price, and the liquidation price of the people that buy are below the price. The calculation method of liquidation zone are based on these four configurations. You need to configure the minimum amount that the software will take the trade. This number to greater than trade will took to make his calculations. Then the mean show. The summarized account of trades of this greater than this number and in this range need to be masked of this number 3 million to show in the chart, and you need to configure what of these zones that the software will use. You can combine the zone one or more of one at the same time. Then we have a color scale that show us the value in USD correspondent at the color of the liquidation zone. Always the liquidation zones begin at little lower value, that because that are accumulating candle to candle always than they are not taken. When a liquidation zone is taken, that resets the liquidation zone to 0, and they'll begin to uh, accumulating again. Okay, reset the liquidation. That is because the liquidation zone is taken. So this liquidation zone have a more value because they have accumulated a value of the past candles in that range of price. To understanding the liquidation zone part 2, when you position the mouse above the liquidation zone, you will have three letters: X, Y, and Z. X have time, Y have the price, and Z have the liquidation zone value, 69 million, that need to match with the color scale. Yellow say 60 million, around 16 million. Here is more objective, while color scale is to make a faster age measurement. As explanation, Liquidity are the liquidation zone of the buyer. Liquidity are these um, histogram as horizontal histogram, and leak sell are the liquidation zone of seller. This is a leak sell. The estimation method to know which side has more possibility of being liquidated. The strategy is basically see the open interest rising, and at that time the rising open interest, see which zone above or below have a more accumulated liquidation zone. In this case, we have a more liquidation zone at the top. Clearly, you will see that in the leak cell is more than the leak buy. So the that liquidation zone has more possibility to the price goal to liquidate that. So remember, when the price go to liquidate a liquidation zone, um, so many times happens this liquidation traps after traps before the price go to the liquidation zone, and when the liquidation happens, commonly we will see the open interest go down. That says that our previously analysis is correct.